So here's a question for you. Does the UK's tax authority, HMRC, have some sort of secret window into your bank account? Are they, tracking every single pound you earn? It honestly sounds like something straight out of a spy movie, but the reality, well, it's a lot more complex and, frankly, way more interesting. Let's pull back the curtain and see what's really going on.
And for this entire breakdown, we're going to be drawing on an in-depth analysis that was put together by the experts over at ProTax Accountant.
And really, it all kicks off with this one simple question. Have you ever had that little nagging thought, wondering how much the taxman really knows about your finances? I mean, beyond what you actually declare on your tax return.
To get why any of this is even happening, you have to start with this number, 2.2 billion pounds. That's with a B. That is the estimated size of what's called the hidden economy tax gap in the UK. This is all the money that HMRC believes it's owed from undeclared income. And trust me, they are absolutely determined to close that gap.
So, here's a quick roadmap of what we're going to cover. We'll kick off with HMRC's multi-billion-pound problem. Then, we're going to follow your unseen data trail. We'll meet the digital detective they call Connect. We'll look at the new rules for reporting, see what's coming up next, and finally, we'll talk about how you can navigate this new landscape.
All right, let's dive right in. To really get a handle on why HMRC is doing what it's doing, we first have to understand the massive challenge they're facing. And this isn't just about collecting cash, it's about fairness. You see, for HMRC, this is not some side project. Closing that 2.2 billion pound tax gap is one of their absolute top priorities. The goal here is to level the playing field, making sure that everyone pays their fair share and that businesses trying to operate in the shadows don't get an unfair leg up on everyone who's playing by the rules. So how do you tackle a problem that big? Well, you follow the data. Let's take a look at the digital breadcrumbs that we all leave behind, most of the time without even giving it a second thought. The first big source is something called financial account information, and the sheer scale of it, it's kind of mind-boggling. Every single year, banks and building societies report the interest they've paid out on over 130 million accounts. Let's think about Chloe, a freelance designer living in London. Even the tiny bit of interest she earns in her savings account gets automatically reported to HMRC. She doesn't lift a finger. The bank does it all for her.
Okay, the second key source is card sales data. Let's stick with Chloe. On weekends, she has a little pop-up stall at a local market where she sells her designs. Every time someone taps their card to pay, that transaction gets logged. Now here's the crucial part. HMRC doesn't see each individual sale. What they get is a single aggregated lump sum from the payment processor that shows Chloe's total card sales for the month.
So what does this all boil down to? Well, they're not interested in what you're buying. They just want to know who is getting the money and how much. They can see your name, your address, your national insurance number, and, of course, the total value of your transactions. They're basically piecing together a financial ID to match up against their tax records.
Now, having all this data is one thing, but how on earth does HMRC piece it all together to find someone who's maybe not declaring all their income? Stay with me here, because this next part might genuinely surprise you.
I want you to meet Connect. This is HMRC's powerhouse analytical tool. The best way to think of it is like a giant digital jigsaw puzzle. It pulls in billions, and I mean billions, of data points from all those sources we've talked about and many, many more, and puts them all together. It's one of the most powerful and largest databases the UK government has.
And look, this isn't some dusty algorithm running in a basement somewhere. This is a very active tool. Get this, over 4,300 HMRC staff are now trained up and using the Connect system every single day to run their investigations.
And what's the result of all that activity? Well, in the last year alone, this one system was a key part of more than 500,000 tax investigation cases. 500,000. Just let that number sink in. But here it is, the number that really shows its power. In a single tax year for 2024-25, investigations powered by Connect brought in an extra £4.6 billion in tax revenue. To put that into perspective, that is literally double the size of the entire problem they set out to solve in the first place. That's an unbelievable return on investment.
So how does it actually work? This quote from a tax expert at Pinsent Masons just sums it up perfectly. Connect's algorithms are built to spot anomalies that would otherwise go unnoticed by the human eye. It compares that huge sea of third-party data it holds against what you've declared on your tax return. If there's a mismatch, say Chloe's declared income looks way too low compared to her reported card sales, boom, a red flag goes up. Of course, a powerful system like this needs a constant flow of high-quality data to be effective. It needs fuel. And that is precisely why the rules for banks, for payment processors, and for other data providers are all changing.
This comparison really shows you the shift. I mean, the old way was so clunky and slow. HMRC had to manually send out thousands of notices every year, and they'd often get the data back in one giant dump, sometimes up to 14 months late. The new way is much more like the automated PAYE system employers use. It creates a permanent obligation for data to be sent regularly, often monthly, which makes it so much more efficient and timely.
And hey, here's a quick pro tip for you. This stuff is becoming more important than ever because those tax-free allowances are shrinking. For the 2025/26 tax year, the dividend allowance is just £500. That means more and more people with even pretty modest investments will find that their income is now taxable, which makes accurate reporting absolutely critical.
Now, I know all this talk about data collection might sound a little alarming, a bit Big Brother, but it's really important to know that these powers are not just unchecked. There are some serious safeguards in place. All data handling is governed by UK GDPR. Any request for info must be reasonably required, and critically, there's independent oversight from the Investigatory Powers Commissioner, plus you always have the right to appeal.
So where is all of this heading? Well, HMRC is already looking ahead to the next steps to close the data gap, not just inside the UK, but with other countries as well.
The long-term goal here is actually to make tax simpler for all of us. HMRC is actively looking at collecting new kinds of data, especially on things like dividends and other investment income. And why would they do that? So they can eventually start pre-populating your tax return for you. About half of other major developed countries already do this. And the whole idea is to reduce errors and just make it easier for people to get their tax right the first time.
Okay, so what is the crucial takeaway here? What does all of this actually mean for you? Right now, let's bring this all back to some really practical steps you can take to navigate this new data-driven world.
First things first, know your numbers. Be completely aware of every single income stream you have, no matter how small you think it is. Second, keep meticulous records. In a world where HMRC can cross-reference your data in a heartbeat, good record keeping is your absolute best defense. And third, if you have any doubt at all, please seek professional advice. An expert can help make sure you're compliant and, honestly, just give you some peace of mind.
Now, before we wrap up, a very quick and important note. Everything we've talked about here has been for general purposes. Please do not use this as the only thing you rely on to make financial decisions.
For personalized professional guidance that's actually tailored to your specific situation, you really must consult an expert. You can contact the team at Pro Tax Accountant who developed this analysis. You can reach them on WhatsApp or by phone at 07985 689912, or you can just drop them an email at info@protaxaccountant.co.uk.